The advantage we have of the massive size of our domestic market is obvious. The trend of upgrading in terms of consumption has not changed. Looking at the future, if employment rates and people's earnings continue to improve, this will be conducive to further strengthening people's spending power.
Well, let's get more on this from Andrew K P Leung. He joins us from Hong Kong. He is an international independent strategist on China. You know, this 18% rate of growth is the highest since China began reporting quarterly GDP in 1992. But if we factor in the low base comparison of last year, are these numbers that we're seeing out of China really that impressive?
Well, true, because there's a great deal of this statistical distortion when you're comparing the first quarter of this year with the first quarter last year, which was a contraction, a 6.8% contraction. So obviously you have a much larger figure. But if you compare this quarter's growth with the last quarter of last year, then the increase is much less impressive. It's definitely in single digits. But also, if you look at the growth in consumption and also exports, obviously China is the first country to have recovered very rapidly from the pandemics. There's a great deal of pent-up demand amongst the consumers, and also China is the largest manufacturer in the world, whereas many other countries are virtually under shutdown, in some of the manufacturing bases. So this accounts for this surge. But underlying all is, first of all, there's a statistical distortion, and secondly, there are underlying headwinds facing the Chinese economy. Not least of which, of course, is the geopolitics with the United States, and also weaker demand in a lot of China's export markets.
Mm-hmm. China is expecting its economy to keep growing this year, but at a lower rate than we've seen in recent years, although its economy has been slowing down over the last 5 or 6 years or so. What kind of policies might we see Beijing make to keep its economy expanding?
Well, first of all, it's a favorite kind of observation that China's economy used to grow at double digits, but now it's down to single digits. So this seems to suggest that China's economy is going down, but actually it's far from the case, because the Chinese economy is a much larger base now. It is easy to make 10% growth if you have only, say, $10. So 10% is $1. But if you have $1 trillion, it's not so easy to make even single-digit growth. So it's got to be put into that context. But these necessarily a slower growth rate of a much larger economy has been factoring in China's latest 14 5-year plan. There is no target, actually, but for this year, there's a kind of indicative figure of 6%. But all indications suggest by many economists is putting the figure much higher than 6%. This is because, as I said, there is a pent-up demand, and the manufacturing machinery is now running at full speed.
All right, we'll leave it there. Andrew K P Leung in Hong Kong, thank you so much.